All right. Good morning, everybody. TGIF. So we're looking at Hong Kong flat has a chance to rally today with the China ADRs if they can turn things around. US tech up the most, meaning the NASDAQ. Dow 30 at 0.5%, S&P just slightly underneath. Japan closer to 0.25%, and the Russell, I mean, really, it's flat. It just doesn't know it yet. It's consumer sentiment today at 10 a.m. and a lot of Fed speakers. One's going to be on TV. The other two, they're just trying to get their point across before they go into blackout mode. And we got QRA at the end of the month with Yellen. So, she's going to have the stage to herself once they go into blackout mode. Shouldn't be too bad after 10 o'clock, other than those Fed speakers. They're going to be, the worst. Here's their list. Just remember that when you're on Finance Juice, it's local time, meaning this is not Eastern. This is my own. You can go to Finance Juice and see your local time. And the chip makers were firing it yesterday. That echoed into Europe and around the world, and then back again this morning. We already seen, though, that we've started to hit the upper ADR. See the ES hit the ADR half and has already rejected off of it this morning. Like I say, every time we do this early in the morning, if you hit the ADR this early, you have the potential to go hit the other side by the end of the day. So yesterday, the biggest theme was a relief bounce in the fangs. And for most of the day, it didn't look like everything that we had talked about was going to work out. Remember, I went through the fangs yesterday, really kind of talking about an upward move in a relief bounce if we could get that breakout. And for most of the day, we just weren't getting it. And then it all came flooding in at once. The volume's a little light this morning compared to what we've seen earlier in the week, but it's still within the norms. 112 is nothing to sneeze at. If it was sitting in the 50s or the 60s, we'd be concerned. What's interesting, though, is even though we do have a volume in the 112 range, we've got a market maker move this morning. This implies that they are hedging. Not even implies, it just straight up tells us they're hedging. There's no wink, wink, nod, kind of, sort of, maybe they're hedging. They're hedging, but they're also trading. It is OpEx today, and OpEx can produce volumes that mess us up, right? Because they can roll. It wasn't a new bias. They didn't have a new idea and want to come in and start a new position. They're just changing their dates, rolling it out. So we'll see some volumes that are going to mess with stuff a little bit, but hedging is hedging. It's all on the front end. And if they were just rolling, it wouldn't produce this market maker move, right? So we know that they're hedging in the front end. What I tend to do with this market maker move is I add it to the upper ADR and I subtract it from the lower ADR. Because the average daily range is what we know a market can do on a day-to-day basis on average without even trying. It can hit both of these levels in the same day. What the market maker move tells us is that we could go even farther than this and it still wouldn't be a stretch. We're not even asking for very much at this point. So we're talking about, the S&P easily reaching 48.75 today without even trying. That's not even a wow day. That's just another day in the park. It would be one of those rip your face off rally days, right? Where we just run and run and run and you think there's no way it can go any higher now. And then it just keeps going and keeps going and keeps going. That would be one of these days. To the downside, it would be 47.50. Well, there's a number we've heard a lot. That was the structural support level for a long time. Then we broke below it, kind of winked it just a little bit, and we came back up again. So notice the put wall has changed. It's right up in the midst of where we spent most of this week. They rolled it up right up into our area 4780. So a move to the downside today to get into that lower ADR and the full ADR would have us crossing through the vol trigger, zero gamma, and into the put wall, which on first instinct, we're going to call that support. So if we did get all the way to a full ADR today, it would start to signal like a flash crash, and we could get down to 4,700 today. That's what happens when you get underneath the zero gamma and the put wall. Selling begets selling, and it'll just flash crash. It's kind of cool. And you can trade the heck out of it too, which is profitable. The call wall is all the way up here. 5028. So we don't have to worry about that call wall as a resistance. We're also above the major voodoo line, this green one. It's the biggest line that the voodoo lines have. And there's not another one until we get to the measured move from the market maker move, 4872. These are minor voodoo levels. They count, but they're not as powerful as this lavender. I don't know what color that is. Purple. When we get the moving averages out of the way and we get that spot gamma indicator out of the way, we can see things a little more clearly. We've crossed back through the weekly pivot point, so we are above it. We've got an MDP, that's a missed daily pivot, because we're above the daily pivot and we have not hit it yet. Now that doesn't have any weight for us today. It will matter more on Monday. The missed daily pivot doesn't count until the end of the day, that we went all day without hitting it. If you want to know more about that, because it's not my strategy, I don't even trade it. I just use it as analysis. You can just search missed daily pivots on YouTube. You'll find the videos on it. You'll understand why I at least reference it. We did carry the VWAP with us relatively well. Now that we've made this move, all the market has to do is keep it. We're still inside week. We haven't broke out of the previous week's range yet, but we could just sit up here and chop between 48.40 and 48.20 for the rest of the day, really not doing much of anything, and go into the close with a reasonably decent week. I kind of got a feeling we ain't going to do that though. So looking at it on the weekly, this was a really nice recovery bar. We're up near the high of the week. That's all we got to do. That's it right there. We just close at these highs and we're good. 48.31 or 48.32 is a cog line. So we're right at a center of gravity. And that could just wrap up the week. I kind of got a sneaky suspicion though that we're not going to do that. We're going to expand, and that we could very likely get into areas even higher than 48, 41 and a half. All right, so you can see this white line here on the intraday. That's a weekly trend line. It's an angled trend line. It didn't exactly hit it to the penny, but that's what the market has to deal with. And there's the close of last week, 48.11, another cog line. Can't stress how important it is that we get a higher high today. We got to get above this 48.38. It's all a matter of pure price, right? There's analysts who use things like indicators, moving averages, things like that to identify trend, momentum, topping patterns, things like that. And there's other analysts who use just pure price. When we set this pivot and we failed to get a higher pivot, that was bad. And we pulled back from it. Now there's an argument about how much of a pullback you get before you consider this a pivot. Just like back here, would that be considered a pivot as you leave that range? Was this distance enough to be considered a pivot? This one is definitely enough. There's not much of an argument there, but would this be enough? So the same thing with this little bit of a pullback, is it enough? Now I say it is, but it's a fine line. Some analysts use a measure to move on that. The zigzag tool is kind of handy to do that for you. But if it isn't, and we put it into argument that we have not yet set that lower high, and that this is still the high of the control factor, then this is our high and this is our low, and this does not yet count. And if that's true, then what we're doing now certainly does. It has to get above this level. Because if we fail here, it'll be almost impossible to continue to argue that this doesn't count. Right? Pure price method. So we need at least an equal high. It has to hit the same high as before. But I would argue the market isn't going to stay in this wishy-washy kind of sort of maybe state. It wants answers. 48, 41 and a half is the market level that we have to tag and or exceed. And if we exceed it, we could just expand really nicely beyond it. $48.51 or $48.50, just for some easy numbers. If we do expand above the 48.41, then just add those 10 points to it, because that'll be the target. Unless the Fed today says something completely off the wall, I don't see any reason for us to visit these lower pivot points. The ADR on the lower end, really just kind of believe we're going to hold the line. 48.11 cog line, 48.32 cog line. We hold that into the end of the day, be the end of the week. It'll be a reasonably decent week, higher than where we opened. And that's how they'll take it. It's important to point out, even though I already talked about the daily pivot point and the fact that we haven't hit it, when we open, we always look at where the pivot point is. If we open above it, we're bullish. If we open below it, we're bearish. And that's generic. It's pretty easy to just off the cuff say, oh yeah, we're above the pivot, so we're bullish. But there's been many examples in the past where, we open below it and that's bearish, and then, we rally. So, that by itself can't sustain us for the day. It's just a starting point. We talked yesterday about unfinished business and having an early morning or a move in the Globex where we have to ask at this point, have they got their work done? And what else could be on their agenda if they haven't already finished it by now? We should know by the way price deals with VWAP. You can see they still had unfinished business back here when we got to VWAP. They bid it. They took over before we ever got to VWAP here. So if there's still work to be done, they're not going to come through VWAP. If they're done, we'll get to the other side. Ten-day, 30-minute volume profile. We've crossed through the point of control in both directions. It almost has no respect at this point. But I had mentioned yesterday to be cautious because if we came up into it unfinished business, we were very likely going to struggle there. And we did. It took a long time for us to finally get through that level. We just kept working at it, working at it, working at it until there wasn't left to work through, and we made it. So this is why, having that big picture point of view helps. Yesterday, throughout the trading day, if you kept in mind that's where the point of control was, and that's what we were struggling against yesterday until we finally whittled it away enough to get through there. Then it made sense, and you were able to take advantage of the break to the upside, understanding that, hey, we finally made it through that liquidity. So we're starting to see an increase in volume here without the increase of time, showing that we hit a ceiling, could be done, but we hit one earlier when this was first popped up. Spent some time there as well, but drove through it. Much greater level here. And we're not seeing equal reciprocation, right? The volume now isn't as high as the point of control, obviously, or this would be the new point of control, but it's not far off. And we didn't spend even half as much time here as we did down here. So we hit a ceiling. I want to see what we do with this. I don't think it's done yet. If this does become the point of control today, it's very likely where we stick, like I've been mentioning, that we just kind of hold it here. Just remember, it doesn't owe us a hold, and we could easily fall back down to the 48.11, the lower cog line. That's kind of my two levels today. 48.32, 48.11. They're both cog lines. They're both relatively within range of the VWAP. This would be a low side from that VWAP. I don't think it'd get us too far. Just far enough to mean revert, like back here. Get a little too far from VWAP, we come back. We get a little too far from VWAP on this side, and we came back. Getting down to 48.11 would get just about as far from VWAP as I think we'd want to get, and that'd bring us back up and be at the end of the day and at the end of the week, and we'd be done with it. Bob's your uncle. Since it's Friday, we have next week's range. Just remember that the range is not set in stone yet. It doesn't set until the end of the day. At 4:15 tonight, that box will quit moving and then it'll be set in stone. Until then, we got an idea of what next week's volatility looks like, what the range looks like. We can measure the week we have and compare it to next week. This isn't a fair comparison because the week that we just went through was a 4-day week. Next week is a 5-day week. So obviously it has more volatility just because it has more days. But it doesn't look expanded significantly. It really just looks like one extra day of volatility. So I'd say the volatility that we have next week isn't any greater than the volatility we had this week. So far, it does look like we're going to close inside the box for the week. 48.66 is the upper edge of the weekly expected move. And we have no reason to believe that we're going to close outside of that level today, since we close inside this range 80% of the time on the S&P, 70% of the time on any other product that you were to put the weekly expected move on. .75% away from the 10-week. We've just been kind of holding this. Doesn't really seem like it wants to expand back up yet, but we certainly haven't come down to it. The hidden line back here is kind of a moving average. Shows that it is trying to trend up again. The average is, if we kind of zoom out a little bit. But looking at the 10-day moving average, we are working our way back up on the histogram, but the averages are trending down. Kind of implies that the distance from the 10 that we use on the daily, that range is getting smaller and smaller. How far price will get from the 10 before it happens to reverse and mean revert. It's a little bit like a volatility gauge, if we consider the word volatility as movement. What I added there is the daily open range, the door. That way it's just a part of this now. Still working on some VWAPs that work as good on Thinkorswim as they do on TradingView. The layers of VWAP that they have here is just fantastic. So we got the ES here. You can see today's VWAP that started at midnight. I don't like that. I like the one, or it started at Globex. I want the one that starts at midnight. So the one on Thinkorswim is better for that. But these other two, the yellow one is the start of the week, and the cyan one is the start of the year. For the S&P, I'm still going to add one for the start of the new contract session. And then once we're out of January, we'll do one for each start of the month. So start of the day, start of the week, start of the month, start of the year, contract change. And for equities, it would be dividend, earnings, investor day events, large gap ups or gap downs. But on the week, we are back above, and on the year, we are back above. Got this sneaky suspicion that it's going to be, that we're going to hold above that yearly now. Finally. All right, so the box that we've had since the start of the year continues to hold for oil. We still haven't got out of this thing other than to just wick out of it and come right back in again, just like we did earlier in the month where we wicked out and came right back in again. Still can't see a log argument until we get above this critical level. And it would be the start of a whole process getting back into the 80s, the 90s, just Just can't see that move yet. Gold managed to get that turnaround on the 2000 level. So it's still fading down. The expectation is that we'll still make it back to 1975, this level back here, but we did get a half back bounce on that 2000, right? If you measure this candle, there's your half back. So if that holds, fine, we'll start looking for a trend line breakover, run gold back up. But otherwise, if this is just a continuation with lower highs and lower lows, then the target is still 1971. All right, we got Japan stalled out at 148.5. As someone much smarter than me continues to point out, US dollar Japan is a really great proxy or a recommendation, not a recommendation, an example, a reflection. That's the word I'm looking for, of the dollar and yields. So if US dollar Japan is going up, then we're expecting the dollar and yields to go up, the dollar index, right? Not the actual dollar. So two dojis here on the daily chart, just really struggling at that 148.5. If this lines up with a fall, should we reject here and actually pull back away from this resistance? Then we're talking about a falling dollar and falling yields, and that's bullish for the S&P and the NASDAQ. That's a swing trade bullish setup. Be long the indexes, long tech, long semis, long growth, and value would take a back seat. Although I could have swore this morning they just called Apple value on Bloomberg and they were arguing about it or laughing about it. Okay, whatever. Call it Bob's uncle if you want to. Just it's very likely going to move. Tech is tech. So this is something I'd be watching for if you're looking for a swing trade. You want to see this pull back. Now I'm on a daily chart, so kind of keep that in mind, right? It's not like we're looking for a little wink and a nod. This thing needs to show us a serious rejection and start to fall back. If we break out from here, then there's a threat of Bank of Japan intervention, right? And if you look at the 10-year for Japan, it is elevated this morning and broke out to the upside. So it's certainly worth keeping an eye on US dollar Japan. We're flat on the day right now. Just, I mean, that's doji 100%, right? So this is like one of the biggest things on the table. Got to get this resolved. And it'll tie right into our swing trades. Tesla is down again this morning in the pre-market. It's still inside day, but we can see from the pre-market tag here, it's all the way down to 210. What I would be looking for if I'm trying to play Tesla long is to see it bounce on this low, on yesterday's low, and try to rally. Almost like a mean reversion play, because it's not like we're going to try to go long Tesla yet, right? It's been in a serious beatdown. I don't think it's done, but it could get a little bit of a mean reversion. For even a 0-day play, running an at the money put credit spread after it touches that low, you probably get, better than a half to half if you put one leg a little deeper in the money. So, you could get a reasonably decent at the money put credit spread. And as it runs up away from you, you can roll into it and or just close out a 0 day, so just close it out. The rest of them are various stages of green, with semis up the most. AMD, we got a R2G, it's red to green. I always thought that was just somebody being funny, until I looked it up and found out it's an actual trade strategy, or at the very least, it's a analysis concept. R2G, red to green. Generally, it's supposed to be happening in the same day, but depending on the trader, R2G can be a lot of different things. Red yesterday, green today. The recovery off of the low in AMD as we rallied back up and closed. And think about where we closed. It was still higher than the previous day's close, right? So when you look at it from that point of view, yesterday wasn't a down day. If it closed higher than the previous day, then it was an up day. This candle's just red because, well, we had opened way up here and we closed way down here. So if you open high and close low, it's red, but it was still higher than the previous day's close, so it's green. On Thinkorswim, it uses what they call trend candles, and this would have been a hollow red, but whatever, it doesn't matter, right? Maybe they even have, no, yeah, okay, that'll work. Green hollow is just a normal green candle. This is a solid green candle showing that it opened high and fell low, but still was green because it closed higher than the previous day's close. Da, 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 da. There we go. Trend candles is what that's called. Either way, AMD's already up 1.8. NVIDIA also 1.8. Yesterday with a solid green candle showing that same concept that we were just talking about. And the gap up today on this one is just fantastical again, just like yesterday. So this is your better R2G. Wednesday closed red after a nice recovery bar. Gapped up. Tried to close the gap and couldn't, and rallied back up to close, and now gapped up again. NVIDIA's got a habit of this. All right, sometimes those gap ups are reasonably decent. There's a gap and it just kept going. Same thing. Same thing here. But then you get one of these where it gapped up and it just had this horrible day and it stalled out for days. Gapped up. Now we're trying it again and even again. There was an analyst the other day. Uh-oh, what did I do? There was an analyst the other day who said, when NVIDIA goes, that'll be when everything else goes. Well, I should not have been so quick to hotkey that, because I hotkeyed something. Oh boy, I broke it. Well, we'll just call it a wrap there. Won't get into his equities, I guess, unless I can get this fixed real quick. Yeah, pretty. Yep, there it is. Boy, that is a dangerous tool. All right, let's get equities done before I break something. So they said once NVIDIA stops, the rest of the rally is going to stop. And I'm not going to put a lot of weight into that, but as a bellwether for risk, NVIDIA certainly does stand out in that way. So we got PayPal this morning. This is the third day now where it's just been a monster move. If we're just getting back up to this top around $64, then we're going to stall out here. But I got to say, the move has been just, I mean, that's violent, just absolutely violent move. And I'm not sure how comfortable I am with that. Had a deep dive on this earlier. I still think PayPal is going to be the Phoenix, the company that rises out of the ashes to soar to new heights. But so far, it has not done that. It just continues with these lower highs and lower lows in a very clear trend. It hasn't ended yet, so it's still on my radar as a potential play. I'm on a weekly now, and this is just a massive trend line. So if we can get, say, above, oh, I'd really like it above 76, then we can start working on, 100% of that or close to it around that 140. But we're a long ways from 76. That'd be for a trend, right? Not for a trade. Just getting in and getting a trade. All right, Apple with its big gap up. A lot of these have just the same setup this morning. I didn't do this, but I guess I should. Things that are up this morning, everything. And the things that are down this morning, the China ADRs are getting worse. And really, that's it. Nat gas. So let's look at those China ADRs real quick. It looked like it was getting worse. Yeah, it's not getting any better, that's for sure. So this is the K-Web. So it kind of represents those internet ETFs from China, but I like to just lump them all in there. So just cycle through them real quick. JD, gap down, beat down. PDD, Baba, and Baidu. They all pretty much looked the same. I didn't see anything good on that either way. In fact, Baidu looks like it wants to carry on. Keep on keeping on what it was doing. So nothing good out of those. So a couple ways to play this. With this really big day from yesterday, you can lay your levels on it and fib it out, but they're going to be so wide, they're not really going to be very helpful. So you can do it, but you're not going to get much from it. What you could do instead is narrow up your focus and just do the RTH. There's nothing wrong with that. So RTH from its highest point to its lowest point gives us 190.76 as our resistance across the top. This will be the half back. So a half back rejection could put us back into that door, day one open range. Otherwise, what I would want to see is a bounce on yesterday's high. As we get near the open, get a little fade back here, catch some support around this 189, and then retest that 190.76 and continue on to 192.5 for Apple today long. If we get back inside of yesterday's range on Apple, you could trigger short below this 188.5. And once we get through 187.5, kind of increase your bet that we can get to 185. But just like with the ES when we were talking about it earlier, while I don't see any reason for us to sell off, even if we do fade, all we got to do is hold these highs. So Apple fading and resting in this circle of influence without actually, coming back down to like 182 and 181. All it has to do is hold this high. So if you do short it on a breakdown back inside of yesterday's range, I would look to get out of most of the trade by around 187.5. You could leave a runner, and if we get through that, then the next target is RTH low. So these are the levels that we had laid out yesterday on Microsoft, and we were expecting that upside push and we just never got it. I could have just left all those lines there for today, honestly. It's the same analysis, the same setup, and hopefully just with a better outcome. But we're going to use the RTH and not that Globex from yesterday. So it's going to change the numbers slightly. If we do get weak this morning as we come into the open, I think it's okay if we come down and test that 395, but we don't want to get back inside yesterday's RTH. So it needs to stay above 394. Anything lower than that kind of adds to the short on the day. And since, you know, it's Microsoft, I wouldn't expect to get outside of the low of yesterday. So any short should be short duration, try to get out by 390. Otherwise, for the long end, I mean, we're already up a considerable amount this morning. Getting through our own Globex. Just kind of get through this big candle here that we got. $400.5 isn't bad. Maybe 401 as an overshoot. I mean, it can go farther. We got a market maker move, but it's already up a considerable amount. Well, Amazon is at its half back. So if that's all we get, it'll make sense that we just stall out there and we end our day keeping the level between, say, 153 and 155. Because I really don't see that it owes us anything. Not just Amazon, but the market. S&P looks like it's going to just hold these highs and stall out, yada, yada. But if we expand, then 155.73 would be the next target. And then if we get one more level up, it'd be another dollar, 156.75. Google is one of the names that was on the optionality scanner this morning. I believe it was on the put side. See if I can dig that up somewhere here. Nope, it was on the call side. So GOOG instead of GOOGL, the one that I'm looking at, had 145 as the call resistance. And we're there this morning. I mean, we actually shot above it a little bit. Now, the way they do this on Mentor Q is they look for names that are at their call resistance. And my approach is to run a call credit spread there on the assumption that it's call resistance. They won't be able to get through it. They'll fall back away from it. And my call credit spread would monetize and make money. Their approach is look for a breakout above that call wall, and that markets generally will expand at least 1% above that call wall. So if we use that approach for Google, even though it's GOOGL instead of the scan that showed GOOG, same difference. Same difference to me. So that's a minor level, pretty close in. I think I'd be better off using the same one that we've been doing this morning for all the others. Just do the RTH of yesterday And that gives us 146.5 and then 147.5. And we do have a market maker move. It's not very large, but it is there. It's worth taking into account where Google sits out here. So I like that 147.5. But we got this kind of a rising wedge to it, or we could be looking at a blow off top. That's an ugly chart for sure. Now, I was thinking about a swing, but it's just hold off on that. So looking at the sectors, pot stocks are up the most, 3.5%. Behind that, airlines, gold, miners, cloud computing, semiconductors, more Bitcoin, gold, tech, emerging markets, which is China, more gold, SPY, Dow. The indexes get into financials right at the end. It shouldn't. Let's try to kind of just sum it up real easy with this baseline bet. We're going to just hold the line and get into the end of the week without giving too much back. What we could get, and we're starting to see it right here, is one of those rip your face off rally days, one of those days where we really expand to the upside or the downside. I mean, I'm not picky. This can still flip. Remember the statistics that no matter how bullish the market is, when you get into the first 30 minutes of the RTH, the regular trading hours, no matter how bullish, the market has a 50% chance of flipping over and going the other way in those first 30 minutes. All right. So I'm bullish because the market's bullish. We're up through the ADR half and it's still driving to the upside. But baseline bet, this is turning into one of those rip your face off rally days. We're completely outside of yesterday's range and expansion, no less, right? After everybody thought we couldn't do it, we're through it. We're expanding above it. This could just go. And if it gets wild, it'll be the full ADR plus the market maker move. And we're still not reaching even at that point, right? If we wanted to get really wild with it, we would measure the full ADR and set it out another 50% of that. 4,900 by the end of the day. All right, so that's if we get wild with it. I don't see any reason for it to get that big, but we do have Fed speakers today, and all they got to do is, lighten the animal spirits a little bit, and then away it goes. So that's one side of the coin. The other one is we've already reached the ADR half this early in the day. And as the story holds true, once we hit one side, we can easily hit the other side, especially if we have all morning to do it, right? So what I would be looking for a play like that is first get back below the ADR half, although that can act as a magnet. So just getting below it doesn't necessarily make me want to run to here. But getting below this cog line at 48.32, that would be another line in the sand. And even just getting through the halfback of this whole thing would certainly get me wanting to run to the other side of the ADR. And I mentioned that not just for ESs, but say for the S&P, SPX, SPY. If we want to get to the other side, say in options or something, then we kind of need to get those triggers. So 48.32 is the cog line, halfback at 48.25. Our own Globex, or even perfect yesterday's high. We get back inside of that. You got multiple reasons to target that downside and level after level after level, all the way down. There's the Globex high. And 4,800, basically. That's what I just marked there. All right, everybody. Have a good weekend. I will see you all next week.